On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June.
The fight between the White House and the Federal Reserve just escalated into unprecedented territory. Federal Reserve Chair Jerome Powell is now the subject of a criminal inquiry launched by the U.S. Attorney's Office in Washington, examining whether he misled Congress about the Fed's massive $2.5 billion headquarters renovation. What began as questions about construction spending has now become a full-blown confrontation over the future independence of America's central bank, a showdown seasoned political reporters are calling the most aggressive legal pressure on a Fed chair in modern history. The New York Times confirmed that prosecutors are reviewing Powell's sworn testimony and internal spending records linked to a renovation project that has now blown several $100 million past initial estimates. But that's only part of the story. Other outlets report the Justice Department issued multiple subpoenas late last year after the Trump administration privately complained that Powell was stonewalling rate cut demands. Notably, no charges have been filed, and even DOJ sources admit the probe faces a high legal bar, making the investigation itself a powerful political tool regardless of the outcome.
That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people.
In a rare public video address, Powell fired back, warning the inquiry represents an attempt to politicize monetary policy and punish the Fed for refusing to slash interest rates on command. Financial markets didn't wait to interpret the message. The dollar slipped, bond volatility spiked, and gold hit fresh highs as traders priced in the risk of a direct power struggle over U.S. monetary control. Wall Street analysts openly worried that indicting a sitting Fed chair would introduce a level of uncertainty not seen since the Nixon era. The political fallout is just as intense. Democrats called the probe a corrupt takeover attempt, while several Republican lawmakers warned it could backfire by undermining the DOJ's credibility. Trump, who has repeatedly railed against Powell since returning to office, insists he is not personally driving the investigation, even as he publicly pressures the Fed to deliver faster and deeper rate cuts ahead of Powell's term expiring this spring. With no clear resolution in sight, the question hanging over Washington is simple but historic. Can the Federal Reserve remain independent under active criminal scrutiny from the administration it is meant to resist?